Hey everyone, welcome back once again to our CA Foundation Business Economics series where we are discussing CA Foundation concepts in a most quick and practical manner. So, without wasting much time, let's get back to the video. Today we are discussing chapter 7 Public Finance, in which we will be covering unit 1 Fiscal Functions, an overview of center and state functions. So here is an introduction for this. Public finance deals with the income and expenditure of the government and how it manages its resources. The government plays an pivotal role in regulating and influencing economic activities aiming to enhance the welfare of its citizens. The primary function of fiscal policy includes allocating resources efficiently, redistributing income, and stabilizing the economy. So you might have seen budget which is present every year, which has all these areas about economic, how the government is aiming to spend its money, and what are the policy and plans that government are aiming to implement in the upcoming future. So here comes second topic, the role of government in an economic system. A economic system helps address scarcity by determining what, how and for whom to produce. Government intervenes in the economy to achieve macroeconomic goals including national defense, that is protecting from external threats, justice system, that's internal law, order and property protection. Third, public goods, that's provision of goods like roads and education that the private market may underproduce. In the Indian context, the government plays a vital role in public welfare by providing key infrastructure, social service, and regulatory framework. For instance, the Indian government has developed various welfare schemes such as public distribution system (PDS) to ensure food security. Then comes the allocation function. That's resource allocation ensures that the scarce resources of the country are used efficiently. This function aims to correct market failures and ensure the optimal production of public and merit goods. Market failures arise due to factors such as monopoly, public goods, and externalities like pollution. Here is an example. The Indian government allocates resources to the production of electricity and public transport systems. It also uses subsidies to promote solar power and impose taxes on pollution to improve social welfare. Then comes the redistribution function. That's the redistribution function ensures a fair distribution of income and wealth among citizens. This is done through progressive taxation and government spending on social welfare programs. So our income tax is a progressive tax system. So we will shoot a short video on it about what is our income tax, how are the tax slabs been ensured, and how it is progressive in nature. So continuing, the government also provides basic amenities and services to welfare weaker section of society. Example is schemes like Manreka, that's Mahatma Gandhi National Rural Employment Guarantee Scheme or Guarantee Act, provides employment opportunities and wages to rural households, ensuring a minimum standard of living for marginalized populations. So there are various schemes for this section of people. Then comes the stabilization function. That's the stabilization function deals with achieving macroeconomic stability, focusing on full employment, controlling inflation, and stabilizing prices. The Indian government uses monetary and fiscal policy to stabilize the economy. Here comes expansionary fiscal policy, that's implemented during a recession by increasing government spending or cutting taxes to boost aggregate demand. And then second comes contractionary fiscal policy. It is used during high inflation by reducing government spending or raising taxes. So taxes are reduced or government reduces their spending. An example could be during the COVID-19 pandemic, the Indian government adopted expansionary fiscal policy by increasing spending on healthcare, providing economic stimulus packages, and reducing GST rates on certain essential goods. Then comes distribution of revenue between the union and states. The Indian constitution provides for the division of revenue between the union and the state governments to ensure fiscal federalism. The distribution is governed by various articles. First, Article 268. That is related to duties levied by the union but collected by the states. Second comes Article 269, where taxes levied and collected by the union but assigned to the states. And third comes Article 270, where taxes levied and collected by the union and distributed between union and states. So GST is a part of Article 270. Then comes Finance Commission. So the Finance Commission is an institutional body that evaluates the finance of both the union and the state government and makes recommendation on how taxes should be distributed between them. The 15th Finance Commission recommended that states shall receive 41% of central taxes. Here are some examples of fiscal functions. So to understand these fiscal functions better, let's take a numerical example of our country's budget with various allocation and revenue collection. So here is an example. Assume the following data of the government. Here tax revenue of 1000 billion rupees. Expenditure on public goods is rupees 500 billion. Expenditure on redistribution schemes, that is welfare programs, is rupees 200 billions. And expenditure on economic stabilization program is 150 billions. So that the tabular data looks like this. Allocation of that public goods is 500, redistribution is 200, stabilization of economic policy is 150, total revenue required, so total we required for above spending is 850, while the total taxes are collected by us are 1000, so we have a surplus of 150 billions. So this example shows that government has a surplus of 150 billions which can be used for future investments or reducing their debt. Then comes to the end of this chapter, where we will be having MG extras, practical activity or exercise which will help you to understand some of the concepts in a more better and practical manner. So first, MG extra, analyze the national budget. So examine the Indian Union budget and identify areas where the government is focusing on allocation, redistribution and stabilization. So how much is allocated to health, defense and welfare programs. Do check it out, do study and do let me know. Then second comes local government spending. So visit a local municipal office and learn how they allocate resources for public goods like sanitization and road construction. Then comes to the conclusion of the chapter, where it says public finance plays a crucial role in managing a nation's economic stability, fairness and efficient resource allocation. Through fiscal policies, the government not only provide public goods but also ensure equity and macroeconomic stability. Understanding these fiscal functions allow for better insights into the government's economic policies and their impact on societal welfare. So that's it from the short video. Thank you. Stay connected, keep learning, keep growing and keep enjoying. Bye bye.